Hello, my name is Vladimir Tikhomirov. I'm Chief Economist at BCS Global Markets, and I'll give you my outlook for macro developments for the coming week. The past week has been very positive for global markets and for the Russian market as well. We have seen a major growth in market indices. We have seen a very significant growth in price of oil, and accompanying, we have seen a very significant strengthening in the ruble. Basically, the ruble and oil ended up last week at the levels at which we expected them to trade at the end of this year. The underlying factors behind that were, on one hand, growing optimism of investors about the fact that pandemic effect is getting lower, and economies start to global economies start to operate more normally. So the hopes are that in the coming month or so we would see more economies returning back to normal functioning, which is very positive. And for the oil, we have seen the intention of major oil producers to extend cuts for production within the OPEC Plus framework. On Saturday, there has been a decision to extend these cuts for another month until end of July, which is also positive for oil because basically we have seen a fairly significant drop in supply of oil, and we are now facing a traditional period of peak demand for oil and oil products. This is the summer months, along with the recovery in the economies. So all that supports positive outlook for oil, for ruble, and for the Russian market. For the Russian market, apart from oil and ruble, another big driver is actually the continuation of conservative policy from the government. Last week, the government presented its plan for recovery of the economy. It's still in the works. The final version should be out by the end of June, but basically the plan on the face value is estimated at around 5 trillion rubles. But looking deeper into that, basically you would see that about half of this money is actually the money that has been set aside in the current budget on national projects in infrastructure and road construction areas. It is good that the government is continuing these investments, but this is not a brand new money that the government is putting into the economy. Out of the remaining about 2.5 trillion, the cash component is slightly less than 2 trillion rubles in my estimates. So this is a fairly small amount of money that the government is prepared to spend. Moreover, this money is likely to come from sources outside the government reserves. About half of that will be funded through the net profit that the government has received from the central bank following this Sberbank shares deal. And another half, about 1 trillion or so, is the money that the government will be placing in the form of new ruble debt on the domestic market. So I don't think that the government would tap deeply into its reserves. All in all that means that the Russian fiscal and debt situation remains very strong, even despite this increased spending from the government, which is also a factor that supports the Russian case, particularly given the fact that in many economies we have seen a very significant growth in debt and very significant growth in budget deficits. So Russia is looking very, very strong against this background. So along with rising oil prices and a stronger ruble, this is something that is supporting a very significant inflow of investor money into the Russian market. I expect this trend to continue in the coming week. Basically, I think that the oil has a chance to grow even further following the OPEC Plus latest OPEC Plus deal, and accompanying basically growth in the ruble. I expect ruble to go below 68 rubles to the dollar, basically returning to the levels that we've seen pre-pandemic in Russia and before the OPEC Plus deal has ended in early March. This is a very strong recovery in the currency and in the Russian market that we have seen. But as I said, I don't think that it's over yet. But however, looking midterm, I have concerns that this current positive trend is going to sustain on global markets because in the large part of global economy, we see very significant structural problems, unemployment, a big hit on services industry, tourist industry is not going to go away very soon. So this is something that's going to weigh on global growth prospects. Also on the oil side, basically the OPEC Plus deal has a good chance to be stopped sometime in August, which could mean that the supply of oil can grow, while the demand for oil can be fairly weak because of the problems in the global economy. So that means that in the third quarter, basically, we can see a correction in oil prices and the ruble. So for that matter, I don't change my forecast for oil and ruble. I expect oil to trade around $40 per barrel, more or less at the current levels by the year end, and the ruble to be below 70, 69 or so rubles to the dollar by the year end as well. But as I said, the coming week is going to be very positive for Russian market. That's all on my side. Thank you.